End of the year, this is typically the beginning of the Santa Claus rally period. So lots of fun on average. All these days between now and the rest of the year are on average in green. But I think we are having a little bit of indigestion. We've just seen such a surge since the election. You know, people are so amped up over all the drivers that have played out so well this year that I think the market is basically taking a little bit of a probably well-needed pause, which makes some sense between now and year end.
Okay, I know one thing you're concerned about, though, is the breadth of the market, or rather the lack of it. I mean, this is a market which, you know, notwithstanding the pullback we've had the last several sessions or so, you know, the price just keeps getting higher. The breadth, though, just keeps getting narrower. I mean, this is becoming sort of a laser beam just focused on one space, and that is AI.
It truly has been the nature of the market this year to just have the AI leaders kind of be the ones who are leading the charge. And the rest of the market has been fairly anemic, and we're seeing that really come to fruition here in these last couple of trading days of the year. And we think that theme may very well continue next year, by the way. The regime of AI and the evidence of some of its benefits, I think, will become more and more evident in 2025. But the leadership is super, super narrow. I mean, we have only about 40% of the stocks in the S&P trading above their 50-day moving average, even as the general indexes of the S&P and the NASDAQ are making new highs. That's not really a healthy combination. In addition, when we look at things like option skew, we're seeing lots of speculation and people bidding up call prices and eschewing put protection. So those are some near-term warning signs. So I think that's worth noting. But I think what's also worth noting is on the longer-term 2025 view, the general things that powered the market in 2024 should be alive and well in 2025. We've obviously talked about the AI trade. We've got a new administration that's very, very supportive of the market and of the economy. The economy overall should be growing at a relatively healthy clip. And the Fed should be continuing to ease, and we'll hear more about that tomorrow. So those four factors will probably continue to power the market to higher levels between now and the end of next year. But along the way, of course, there's going to be typical bumps in the road.